What's going on, everyone? This is Options Trading Lab. Today we are getting into price action. Introduction to price action. What is price action? Core components of price action, and how does price action help us? And examples of price action. What is price action? Price action is a raw price movement in a stock or any asset classes. In price action, what is the advantage of using price action? We doesn't use any complicated indicators. And in this, we use past history to predict the future market direction. And price action help us keeping our trading setup simple and clean. Core components of price action. It's support and resistance, chart formation, candle formation, volume, trends. First of all, you have to understand the trends in the market. There is three types of trends. That is, the market sometimes makes an uptrend, market makes an uptrend. Then after that, the market makes a downtrend, and another phase in the market is the sideways movement of the market. It doesn't make any new high or a new low. It trades in a range. And do not ever solely trade on price action, because price action works usually after 30 minutes after the market opening. With price action only, there is a chance that you might get trapped in fake outs. First, you have to consider the overall market direction. When you select a stock, you have to look at the company sentiment. Company sentiment means, is there any announcement that the company is about to make, or earnings result, or any other important news regarding the company. Then trade with the trend. If the market is going on an uptrend, follow that trend, because trend is your friend. If you trade against the trend, there is a chance that you might end up taking big losses. And how does price action help us in trading? Price action helps us reducing the noise and false signals, because if you follow price action, most of the traders are also following price action, and you might take better trades than those who does not follow price action. And some people might be trading only based on fundamentals, and if you are using price action, you have to look at the fundamentals and the technical side. Then you might get the trades that offer higher probabilities. Price action gives a good structure to the market and represent the crowd psychology, and gives an edge on what will happen, probably based on what has happened in the market in the past. And then the next thing you have to understand is chart reading. First, you have to know what is a stock chart and how do stock chart help us. Chart breakdown, different types of chart, and chart time frames. Chart reading. What is a stock chart? A stock chart is simply a price chart that showcases a stock price over a time frame along with other important information. That means, I'll show you an example of a stock chart. In this stock chart, you can see Apple. In the x-axis, you can see time, and along the y-axis, you can see the price. That means a stock chart represents the change in price of a stock with time. And how do stock chart help us? Stock chart help us to predict future direction, future price movements by analyzing past data such as volume, patterns, supply and demand areas, and direction. What is volume? Volume is the quantity that is being traded on the buying side or on the selling side. In this stock chart, you can see these green bars and red bars. Green bar shows the quantity that is bought by buyers, and the red bar shows the quantity that is being traded in the selling side. Candlestick board. There are two types of people in the market. That means bulls and bears. Simply, we call them buyers and sellers. Buyers buyers actually push the price up. They want the market to go up. And on the other side, sellers drive the price down. The market, they are usually called bears. How to read candlestick chart in depth? Four elements of a candlestick. A candlestick has a body and a wick. Just consider this example of this bullish candlestick. This green candlestick shows the buyers. It is also called a bullish candlestick. See how this candle formed. At first, the candle opened here. Opening and closing of a candle is represented by its body. First, the candle opened here, and see what happened after that. The sellers pushed the price to this lowest level. They were not able to hold on to this price. That's why this wick formed. And after that, see what happened. More buyers stepped in and they pushed the price to this highest level. And see, they were not able to hold on to this highest level. If they were able to hold on to that price, this candle might have closed like this. Here, the buyers were not able to close the price there. And again, sellers stepped in and they pushed the price to this level and the candle closed here. So on a buying candle, on a bullish candle, opening is at the low and closing is at the high. That means increase in price. A bullish candlestick shows an increase in price. And next we go on to the bearish candlestick. Bearish candlestick. See how this candlestick formed. Candle opened here and see what happened after that. The buyers pushed the price to this highest level. You can see that they were not able to hold on to that highest level. And see what happened after that. Sellers stepped in and they pushed the price to this lowest level. And after some time, the buying pressure increased and buyers were able to push the price a little bit higher and they closed the price here. And for a bearish candlestick, opening is at the top, opening is at the top and the closing is at the bottom. That means it is showing a decrease in price, the ratio between wicks and body. Consider this candle, this first candlestick. See, even though this is a red candlestick, it is not showing a domination by sellers, because even though this is a red candle, it is not a strong candle on the selling side, because this candlestick has equal sized wick in the upside and equal sized wick in the downside. That means buyers and sellers are equal in control. They are applying equal pressure in the market, and that's why these equal wicks are formed. So we can't make a trade in the buying side or in the selling side on this candle, because it is showing an indecision. Equal number of buyers and sellers are at that point of time. Take this next candle. This candlestick is showing a strong indication that the buyers are more stronger than the sellers, because here the candle opened here, it went to this low, and buyers pushed the price to this highest point, and after that sellers push the market a little bit. After that, sellers push the price a little bit lower and they close the price here. And see, this candlestick has a small wick. That is showing there is not a strong rejection from the upside. And this candlestick has a big body, which is suggesting that the buyers are more strong. A candlestick with small wicks are the strongest candlestick, or the candlestick with no wicks are the most strongest of all. A big candlestick with no wicks are the most strongest candlestick. See here, consider this bullish candlesticks only for now and see which is the strongest of all these bullish candlesticks. Yeah, this is the strongest one. Why this is the strongest? Because the candle opened here and the candle closed here. There is no wick. The buyers were able to push the price to this highest point, and they were able to close the price here, close the price at that point. There was not an indication of any rejection in the market. or there were not strong sellers in the market at that time. And see the next candle, this candle. Check this. What happened in this candle? The candle opened here. Strong sellers stepped in and they pushed the price to this lowest level. Sellers stepped in and see what happened after that. The buyers pushed the price far above that level and they were able to close the price slightly higher than the opening price. And see, here more sellers stepped in. And after that, what happened? Buyers started pushing the market higher and they were able to dominate the strength of the sellers. And see the next candle. Even though this is a green candle, this is not a strong candle like the previous candlesticks, because this candle also has a wick, equal sized wick in both the upside and in the downside directions. And next candle is a pure indecision candle. We cannot take a trade based on this candle. This is not showing any strength in the buying side because of the wicks. These wicks are equal in size. That means it is showing buyers and sellers are equal in strength, and we cannot take a trade based on this candle. If this candle forms at the bottom of a downtrend, and you have to wait for the next candle. If the next candle is a green candle, then you have an indication that the market is trying to go up. You cannot solely trade based on this type of a candlestick. And the next, check the next candle. This is a green candle, but this is almost equal to a red candle because it is the weakest of these bullish candlestick. Here the candle opened here. Buyers push the price to this highest level and see what happened after that. Sellers were able to push the price and they were able to close the price near to the opening price. It means it is showing a clear indication that sellers are more strong at that point of time. Check this example of this bearish candlestick. Which is the strongest of all candlestick? Which is the strongest one? Obviously, the candle with no wick is the strongest. And see the next candle. Next candle, just consider the formation of this candlestick. How this candle formed. Here, this candle opened here. Then buyers pushed the price to the highest point. And see what happened after that. More number of sellers stepped in and they were able to close the price below the opening price, and this candle ended up as a red candle, and it is showing that sellers are more stronger than the buyers. That's why they were able to push the price to this lowest level. And the next candle is not a strong candle because of the wicks, and this candlestick is an indecision candle. We cannot take a trade based on this candle because it is showing a clear indication that buyers and sellers are equal in control at that point of time. And consider this last candlestick. What is this candlestick telling you? Even though it is a red candlestick, it is almost equal to a green candlestick because it is almost equal to a bullish candlestick. Why is that so? The candlestick opened here and see what happened after that. The candlestick went to this low because sellers pushed the price to this lowest level. See what happened after that. Again, more buyers stepped in and they were able to push the price near to this opening price, and the candle ended up, buyers stepped in and they were able to push the price near to the opening price and close the price slightly below the opening price. And what is that showing? Buyers are strong at that point of time. And that's why they pushed the price to a higher level and they were able to close the price there. These candles are showing that buyers are in control of the market. And these candlestick, this is the strongest one, this is the second strongest one, and this is the next strongest one. And these are the candlestick that we do not, and no one in control. These other candlestick. These are indecision candlestick. We cannot take a trade based on these kinds of candlestick because buyers and sellers are equal in control. And the middle one is a doji candlestick. This what is the speciality of this candlestick? Here the opening and closing is at the same level. The candle opened here, just consider an example, candle opened at 50 and closed at 50. That's why this candlestick has no body. And do not solely trade based on candlestick. Whenever you trade, you have to consider some other factors. You have to consider the overall direction of the market, and then you have to check the support and resistance levels. Then after that, you have to check whether there is volume. Is there buyer stepping in? If you are looking to buy a stock, check the volume. Is there buyer stepping in, or more number of buyers are getting into this stock? Then you have to check whether there is any catalyst that is pushing the stock higher, or whether there is any catalyst that is pushing the stock lower. That means a catalyst means any important news regarding the company, about earnings result, or any new product that is about to launch. You have to consider these kinds of catalysts while taking a position on any particular company. Next, we move on to support and resistance. What is support and resistance? Support is a price level where the buying is strong to reverse a downtrend. The market is going on a downtrend and reaches a support. This support can push the market higher if more buyers stepped in. And resistance is a price where selling is strong to reverse an uptrend. The market is going on an uptrend, and if it reaches a resistance level, what happens? More people place a sell orders and they'll reverse the trend. Then I'll show you how to support and resistance levels perfectly. And you have to understand the support and resistance are not actual lines. It is an area where the stock reverses. And support area is also called demand zone, and resistance area is also called supply zone. You know what drives the market? It is the supply and demand. When supply increases, demand decreases, and price also decreases. When the demand increases and the supply decreases, what happens? The price increases because supply is low and demand is high. Then the price increases. Then we move on to charting. In this, we will learn more about spotting, support, and resistance levels. I usually start from higher time frame to lower, from 3-year, 1 week candlestick at first. Then I'll move on to 1 year, 1 day, then 6 month, 4-hour chart, then 10 day, 30 minutes, then 5 day, 15 minutes, 1 day, 5 minute, 1 day, 5 minute candlestick. That means I spot intraday levels also, and after that I move on to 1 day, 1 minute candlestick. Then I'll show you how to spot support and how to draw support and resistance levels perfectly. Okay, start from a higher time frame. First of all, you have to spot the highs and lows in the market. High and lows in the market. And check the levels where there is strong reversals in a trend. See, I don't see any clear rejection here. I'm seeing this is a strong uptrend and the market reversed. And I'm spotting the line and then travel along that line. Then you have to travel along the line and see this resistance is acting as a support here. This is a, and see, this is a support line for the current market. Then see whether that downtrend ended. Okay, it ended at the low, and see again it started moving up. See, there is a rejection. See the rejection, You can spot this resistance here because when travel along this line, see this area is acting as a resistance for the market multiple times. See what happened after this breakout. Again, the market came to this level. Market didn't want the stock to go below this support level, and this support level held. See where this uptrend ended, and see it again went down. If you draw a resistance level here, you can see I will draw a line here because at first this is acting as a resistance for the market. 1, 2, and then see what happened after that. This resistance level gets broken, and see then it's acting as a support. Whenever a resistance lines get broken, then it will act as a support for the market and travel along that line. See this? These wicks are being formed whenever the market reaches this support line. Okay, so it's a good support line. A good support line, a level which is hit 5 times is a good support or resistance level. And a level which is hit 2 times is a less stronger support line or a resistance line. And when you draw a support and resistance, when you draw support and resistance lines, do not draw multiple lines at unimportant levels because that can make your chart congested, and only draw the recent levels. We'll move on to 1 year, 1 day time frame. Then we in 1 year level, I see a lot of congestion at this level, and see here also it is holding. So we can take this as a minor resistance level. So we can take this as a minor level of resistance here, and it is a support level for the current market because the market is above this line and this is a support. Then we move on to the lower time frames, 6-month chart. See this level, see this level. Okay, in the 6-month chart, draw it with another color. Here, if you are finding it difficult to draw support and resistance levels, just zoom in. Here, the market acted as a resistance. Here, this line acted as a resistance. Then after that, see what happened. This line is acting as a support for the market. Again, multiple wicks are formed here. It is acting as a resistance, and it is also acting as a resistance here. And as you travel along that line, we can see that it is acting as support and resistance multiple times. It is a strong line, and 300, it is a line at 300 level. 300 is also a psychological number because more number of buyers or sellers might be placing their limit orders and waiting at these kinds of psychological levels. Because 50, 100, 150, 200, 250, 300, these kinds of levels are psychological numbers, and more number of buyers and sellers will be placing their limit orders at these kinds of psychological levels. And on the 6-month chart, this is a good support for the market. 237 level is a good support for the market. You have to properly place the support level where the rejection is the most strongest. Here, see this. Most of the wicks here, first wicks are touching and getting rejected. See, here the candle broke this level and came below this support line, and see, the candle ended up closing above that line. So that means this support line is holding. Next candlesticks also, the market is trying to hold that level. And again, this support level is perfectly holding the market. It is not allowing the market to go below this level. If you want to draw support and resistance as perfect lines, perfect areas, then draw the support and resistance like these areas. like draw it as an area. Support and resistance are not actually the lines. It is an area where the stock reverses. Because first you have to draw a line along the wick, and then you have to draw a line along the body. Then you will get support and resistance lines as an area. Then move on to 3-month 1 hour chart. Here the market is was having a strong resistance. See this level here acted as a resistance, then it is acting as a resistance multiple times. See, it broke, it tried to hold the market, then it acted as a support, and see this 319.34 is a good level. If the market breaks this level, then it has a chance to reach this 326 level. Then move on to 1 hour chart. You can see this level. See, it is acting as a resistance, then it is acting as a support here. So we can take it as a minor level. Then move on to 10-day 30-minute chart, 1 month 30-minute chart. Then spot the nearest support and resistance levels to this current market price. I see a lot of rejection here. I see a lot of rejection around this level. Here acted as a resistance, then it acted as a support here for the market, then it acted as a support, it again acted as a support, then also it acted as a support. Now it's trying to act as a support for the market. If it breaks, then the market will go down again, then Apple will try to reach another lower level. If the support level around 316 breaks, then market will the support level at 316 breaks, then the market will try to grow down. Next important thing that you have to do is you have to spot the intraday levels. 5-day 5-minute candlesticks. Use the 5-day 5-minute candlestick and the 1-day 5-minute and 1-day 1-minute candlestick. See this level is trying to hold 316, 315 area is trying to hold the market. If it fails, then it will try to reach around these levels, or below this level. See this 320 level on the 5-minute time frame. You can see this 320 level. There is a strong rejection. And the wick is showing the rejection also. Strong rejection around the 320 level. And that is shown by the wick here. And also you can see that this level is trying to push the market down. Then you have to spot the intraday levels. Intraday levels means 1-day 1-minute level and 1-day 5-minute levels. Finally, you have to spot the 1-day 1-minute level. Spot the higher highs and the lows. Today the market opened here. The first candle reached 317. Then after that, see the market is not able to hold 318 level and it suddenly fell. It is trying to hold on to this 316, 315 area. See this level. This 318 level is having a strong resistance. The rejection around these levels is so strong, and if the market breaks this 318.5 level, then there is a chance that Apple will try to reach this 319.34 or 319.5 level. This is how you draw the support and resistance levels. You have to start from the highest level, highest time frame, 3-year 1 week, then you have to switch on to 1 year 1 day, then 6-month time frame. Then you have to draw support and arrange those support and resistance levels for the 3-month 1 hour time frame, and then 1 month 30-minute time frame. After that, you have to draw support and resistance levels on the 1 month 15-minute time frame, then 5-day 5-minute. Then after that, you have to draw the intraday levels. Intraday levels 1-day 5-minute and 1-day 1-minute candlestick. and your trades. And if you are day trading, your trades should be based. Your day trading, you should use the time frames like 1 day 1 minute candlestick and 1 day 5 minute candlestick. And here you can see that market is currently on a downtrend. Here the market is currently on a downtrend, and I'll show an example on how to draw the trend line. You have to start from the wick and see what happened after that. The market tried to reach this trend line and suddenly the market fell. The trend line is acting as a resistance. It is rejecting the price, and see again this market tries to reach the trend line. There is rejection. Again it tries to reach the trend line. There is a rejection, and the market is perfectly obeying that trend line. And if you check this overall, you can see a triangle pattern. You can see a triangle pattern. See, if it breaks this triangle, there is a chance that Apple will go down. And for that breakout, you have to consider the volume also. You have to check whether sellers are more stepping in, or the market, whether the market is weak. Here, more number of sellers are stepping in. At the opening time, there was a huge number of buyers, and see here more number of sellers are stepping in. And see this small line, this is the average. This is the volume average, and here more sellers are stepping in, more than the average number of sellers in the market. Hope you understand this video. So that's it for today. Next day we will cover important patterns for day trading and swing trading, and we'll learn more about patterns and trend lines.